Hello guys, welcome back to another concepts video. Today we'll be diving into the power of three concepts, which is more or less an extension of the AMD model. Today we will see how true-day open confluence can be combined with accumulation, manipulation and distribution. So let's dive right into it. So what is power of three? The purpose of power of three is to assist traders in recognizing and taking advantage of market phases that are influenced by the activities of major institutional players. This trading theory divides the usual daily price movement into three stages. As we can see, we have the accumulation phase followed by the manipulation and the distribution phase. It's important to think about timing and session profiles while taking care of all these phases. By focusing on the true day open high low close and open low high close, as well as three crucial stages of accumulation, manipulation and distribution, this method of analyzing specific candles or fractals helps us predict market movements, steer clear of typical pitfalls, and match your trades with the actual direction of the market. The AMD model is a fundamental concept aligning with the power of 3. We can say that power of 3 is more or less a wrapper around the AMD model. It consists of three primary stages: accumulation, manipulation, and distribution. The market range is close to the opening price during the accumulation phase, and institutions build up their positions in this region. Finding regions where the price seems trapped within a horizontal range indicating a possible market expansion. The market is moved in the opposite direction of the anticipated expansion during the manipulation period. Traders are trapped when the price breaks to the unlikely direction of expansion. After absorbing all the opposing liquidity, the price then advances in the likely direction of expansion that is coherent with the higher time frame. The actual expansion of the day or the session profile is known as the distribution phase. Strong momentum and a noticeable order flow shift shows imminent expansion. All of the engineered liquidity after the manipulation phase serves as a fuel to move the price towards the higher time frame drawn liquidity. For high probability setups, a higher time frame alignment of concepts and biases across all time frames is essential. Our higher time frame idea should be in line with the AMD model as it is being played out. For power of 3, true day open confluence, which is 12 am New York time, is also utilized after establishing the bias. It acts as an important level for any manipulation or for any trading opportunities. Confirmation on the lower time frame is crucial. Entering a position or verifying the manipulation requires more than just the price moving into a substantial area of liquidity beyond a major swing high or a low. We want to witness a break in market structure and a change in order flow when the price starts to move towards our higher time frame drawn liquidity. Kill zones and session profiles are really important to align our AMD model phases. Accumulation typically occurs immediately after the true day open or right before the designated kill zones. If our higher time frame bias is bullish, we anticipate manipulation below the true day open, which would take out the prior accumulation phase or around the beginning of a kill zone. Assuming the manipulation has put in the day's low and prices are continuing to rise, we look for a change in order flow and market structure in order to confirm distribution phase. Vice versa is true for our higher time frame being bearish. The implementation of power of 3 and AMD stages, as well as the conversion of high time frame concepts into intermediate time frame and intermediate time frame concepts into lower time frame for execution, depends on our time frame alignment. So there are two scenarios in which we can implement the power of 3. Here we have the bullish power of 3. We integrate the AMD model with the open low high close concept. Price accumulates close to the true day open on a bullish day, indicating ranging price activity. Following that, there is a period of manipulation seen by strong sell move below the accumulating range, which engineers liquidity and targets any areas for support in order to create the day's low. As we can see here, we have accumulation around around a kill zone or the true day open, followed by manipulation taking out the previous accumulation phase that we saw, leading towards the distribution phase. Following our manipulation, we see price increasing in a way that is consistent with the higher time frame bias, the present order flow and the market structure. Following the formation of the day's high, which we can see here after the distribution phase is over, and clearing the previous highs and liquidity pools, we observe a shift back into the daily range, leaving a wick above and closing below the day's high. Here we have our bearish power of 3, where we integrate the AMD model with the open high low close concept. Price accumulates close to the true day open on a bearish day, indicating ranging price activity. Following that, there is a period of manipulation seen by a strong buy move above the accumulating range, which engineers the liquidity and targets any areas for resistance in order to create the day's high. As we can see here, we have accumulation right after the true day open or right before a crucial kill zone. We see manipulation inside the kill zone, which is followed by a move down, which is our distribution. The price goes down in a way that is consistent with the higher time frame bias, the present order flow and the market structure. Following the formation of day's low here after the distribution phase and clearing of previous lows and liquidity pools, we observe a shift back into the range, the daily range, leaving a wick below here and closing above the day's low. Here we are looking at the spot gold chart on the daily time frame. This is an example of a bullish power of 3 and AMD model. We can clearly see that here we have marked out the range with this being the low and this being the high of the candle. In the single candle, we have marked out the low and the high, which is our tradable range. Both these candles here depicts accumulation, manipulation and distribution on the lower time frames here, but in this time frame we can see that both these candles are open low high close candles. Moving to the 4-hour chart, we can see here that we have a 4-hour order block overlapping with a daily order block, and we have a clear sweep of the lows of the previous day, which indeed created our range. Inside that range we have swept the lows and now we are moving towards the target, which is our high of the range. It is a simple internal range to external range liquidity move. On the 15-minute, we can clearly see the accumulation, manipulation and distribution phases. To confirm the start of the distribution phase, after this manipulation phase, we have a shift in market structure as well as price respecting all the bullish arrays formed while it moves towards the higher time frame draw on liquidity here. Here we have an example of multi-time frame analysis and implementation of AMD model and power of 3 concept to break down price and select high probability setups. On the weekly here, on the Euro chart, here we have a double sweep inside a weekly bearish order block, giving us a clear bearish bias on the macro level. On the daily, we can see that we have had a shift in structure as well as continued from the external range liquidity here to the internal range liquidity inside our designated range. Switching to the hourly, now we can focus on our setup where we can clearly see accumulation across the Asian session and manipulation above the Asian high inside the London kill zone. Zooming into the 15-minute price action, we can see even more clearly how price has accumulated across the Asian session, and right after the true day open marked out here at 12 am New York time, price has manipulated above the accumulation towards the start of the London kill zone. After we see both the phases of accumulation and manipulation, price gives us a shift in order flow and market structure indicating the beginning of distribution phase. In this phase, price has clearly respected all the bearish arrays while moving towards the higher time frame draw on liquidity. That's all for today's concept video, and I will again end this video by saying the same old boring thing. Just keep on believing in the process and let time do the heavy lifting. I mentioned how this video is a continuation of the AMD model, and watching that video is a prerequisite to understand this video, so make sure to check that video out as well. I also mentioned kill zones and session profiles in this video, on which I'll be making a long detailed concept video in this coming week, so make sure you stay tuned. If you gained some alpha or any important concepts from this video, please make sure to like and subscribe. Leave your suggestions down in the comments and tell me which concept should I go for in the next video. Make sure to join my Discord and check out all my socials mentioned in the bio to stay constantly updated. Till then, stay safe, happy trading, bye.